Welcome. Welcome to TakeStock Live, investor webinar series going live each Wednesday. We're now into the home stretch of season 2, with the final episode coming up on October 28th. Next week, October 21st, you'll have a presentation by Commander Resources, and the week after that, our season finale, we'll have Integra Resources brought to you care of Sterling Merchant Capital. Sam Greer at Sterling's been a great supporter of the show, and we'll be welcoming him back to help out moderate. We'd like to thank the TMX Group and TSX Venture Exchange, our event partner, for helping us keep the conversation between companies and investors going in these very unusual times. We'd also like to recognize the vital support provided by our core sponsors, Fasken, MNP, Lee Jones Gable, Olympia Trust, and the CSE, who helped us launch the forum back in 2014. We'd also like to thank our supporters, our extended network, for helping us make this initiative happen. Thank you to Calgary Meg, to CIM, to the Manitoba and Saskatchewan prospectors and developers, to CHF Capital, to Conduit Capital, and many others, including, as you can see here, Investmentpitch Media and the Newswire. Thank you to them for helping us get the word out. At this point, I'd like to come back on and hand over to my colleague, Mark Francis. Take it away, Mark.
Thank you, Raj, and welcome all of you, our attendees and guest presenters. Note our disclaimer. This presentation is for information only and is not a solicitation to buy or sell stock. Companies pay fees to present at TakeStock, and TakeStock and its principals, Raj Joshi and Mark Francis, may have equity investments in companies we invite to present, may consult to the companies, and make no representation or investment or other recommendation in regards to these presenting or any other companies. You should do due diligence and seek professional investment advice. Some housekeeping matters for attendees. You will note a red Reconnect tab at the top of your screen, which may appear if you lose audio. Just click it and you will be reconnected. Normally we run about 45 minutes. We may allow a little Q&A panel time at the end for technical questions, particularly technical questions if they're asked in the chat room. The chat board will be utilized in this session in particular for this. Please be clear as to whom your question is being addressed, and use the chat board for serious investor and technical questions. Today we have 3 mining companies, and note the change in format. Please tell us what you think in the chat board. We encourage you to do your due diligence, go to SEDAR and connect with the companies directly in order to get detailed information. Contact details for the presenters can be found on our website, takestocklive.com. And after the Q&A session, Raj will post the contact details up for a minute or for about 30 seconds to a minute. Today we have Matt Turner, CEO of ROCKHAVEN Resources, RK, Tara Christie, CEO of Banyan Gold, BYN, and Rob Henderson, CEO of Great Panther Mining, GPR. Leading off, we have Matt Turner, CEO, ROCKHAVEN Resources. Matt is a professional geologist who spent most of his childhood years growing up in the historic mining town of Riondell on the east shore of Kootenay Lake, and completed a degree in Earth and Ocean Sciences at UBC in 2002, going on to manage numerous exploration projects throughout Western Canada, focusing mainly on precious metal, vein, IOCG, and diamond deposits. He became the CEO of ROCKHAVEN Resources in 2008 and helped oversee the discovery and advancement of the KLAZA gold-silver deposit. Matt, all yours.
Thanks, Mark. Thanks to you and Raj for the invitation to present. Again, it's always a pleasure to be part of TakeStock. Okay, so again, as Mark indicated, I'll be presenting on our flagship KLAZA gold-silver project located in the southeast corner of the Dawson Gold Belt in beautiful Yukon, Canada. It's our forward-looking statement slide. Please do your due diligence before investing. Okay, so first I'd like to lead off with a few of the kind of main points on why we think Rockhaven is a good investment. So first off, it's the KLAZA project where it sits right now, where it stands right now, 1.6 million ounces gold equivalent at 5 grams. It makes it one of the highest grade plus 1 million ounce gold deposits ever identified or ever discovered in the history of the Yukon. We wrapped economics around it. This is pretty new. It's since came out since the last time I presented at TakeStock. That was in July of this year. Really good numbers, really robust numbers. That was done at $14.50 gold and $17 silver and a 72-cent dollar. But we're looking at post-tax NPV of $378 million and an IRR, post-tax IRR of 37%. The deposit itself is 100% owned and royalty-free. So again, royalty-free is pretty hard to come by in this day and age, it seems. We've got a pretty large land package, about 287 square kilometers. And I think there's a lot of exploration upside in the rest of the property, and part of that area is what we're aggressively exploring this year. Attractively valued, undervalued, however you want to put it, with respect to and in comparison to our peer group. If you start looking at companies in Canada with an economic study, they're priced at about between 0.4 up to about 0.8 times price to NAV ratio. We're at 0.09, so there's a lot of value we feel there that isn't being reflected in our valuation. We've got a pretty nice clear path forward to pre-fees, which we're going to be starting in 2021. That's going to be exciting, and then this year we're really focused on looking at some of the outboard targets within about, say, 2 to 3 kilometers of the resource, just to see if there's any kind of big ounce deposits that are nearby that we need to aggressively to explore to bring into the pre-fees. Okay, so a few notes on the capital and corporate structure. 208 million shares outstanding, about 250 million shares fully diluted, market cap of 35 million Canadian, and we're when everything's said and done on the program this year, we should be coming out with about $5 million or so. Really good management team, lots of success in the exploration sector, and some really strong shareholders too that control. If you sum them all up collectively, they own over 50%, and that includes Strategic Metals, Core Mining, Insiders, and Sprott. Okay, where we are, it's about a 3-hour drive from the capital city of Whitehorse, down here in the inset. So it's really well located in this kind of broader Dawson Gold Belt. But nice road, Brownsfield area. There's an old mine nearby, so again, it makes it really cost-effective exploration. And quite frankly, I think be a lot easier on the permitting front too as we move this forward. Here's a look at the block model. And the resource table. So like I said, about 1.6 million ounces gold equivalent at that 5 gram average, with about 60% of those ounces in the indicated. 2021 will see us convert those remaining inferred into indicated as well before going through pre-fees. One thing I like to note too in this block model, you've got some of the deepest intercepts in these zones are some of the best, and so it's an epithermal gold system that's hosting the mineralization, and it's quite unique in that we're down, in some cases almost 500 meters, and it's actually getting better. It's not waning at depth. A few points on the PEA. Again, good numbers. After tax NPV 378, IRR 37%. Really, obviously, strong leverage to the price of gold. It gets us about almost halfway there from where we did the study at to where gold's trading at right now, and you're looking at 540 million after tax NPV and almost 50% IRR. Also on the downside, the minus 20% on the sensitivity, that's 1160 gold, and that was still over 200 million post-tax NPV and over 20% IRR. Good numbers on the OPEX, 613, all-in sustaining 875. So pretty decent, especially considering our deposit type and the mining style involved. 244 million initial capex, really, quite a good head grade going to the mill, 4.4 grams. And it's a 12-year mine. That's what's envisioned right now, producing about 1 million ounces gold equivalent combined, with kind of the core years from 3 to 7, where we see over 100,000 ounces gold equivalent produced. Here's a look at the surface overview of the from the PEA. Again, central mill. You've got a couple of the pits here, tailing storage. As we bring up the underground, you can see the underground development. Again, that's about 80% or so of the total mine. The remaining 20% is on the early years with the open pit. So now I'll kind of leave everyone with a look at where we're going to in 2020, and I'll discuss this more, I guess, probably in the questions too. But really, here's the resource area. We're evaluating these other big anomalies that we've identified and that we built up over the last couple of years, and that's really the big focus of 2020, just to see if there's another 500,000 or 1 million ounces or plus out in the distal part away from our resource. There's a look at the big anomaly, the big rust target. We completed drilling there about a month ago, so we're looking forward to assays. And then our goals is really just to keep this thing getting bigger, and that's going to be the big focus this year, and then convert into the full-on pre-feas conversion drilling for 2021.
Very good, Matt. Thank you.
Thank you, everyone.
And now Tara Christie, CEO, Banyan Gold.
Great. Thank you, Mark.
Hold on. Sorry, I need to finish. From 2006 to 2016, Tara was the president of privately owned Gimlex Gold Mines Limited, one of the Yukon's largest placer mining operations. She is currently on the boards of Constantine Metals Resources, Klondike Gold Corp, and Western Copper and Gold. Ms. Christie has been a board member of PDAC, AIM-BC, and other industry associations, and was a founding board member of the Yukon Environmental and Socioeconomic Assessment Board from 2004 until 2016. She has a BSc and an MSc from UBC and is a registered professional engineer in BC and Yukon. Tara, all yours.
Great. Thank you, Mark. Great to be on TakeStock for the first time, and I appreciate all of you who've tuned in to hear the story. I see some familiar names on the list as well as lots of new names. So thank you very much for tuning in. Forward-looking statements. I'm an explorationist, so always optimistic. And the results that we've had this year are reason why that I'm optimistic. We came out in May of 2019 with our maiden resource on the Ormac property, contained in two near-surface deposits, our airstrip and our power line deposits, over 900,000 ounces at 0.54. This is very early days for this property. We acquired it by optioning it in 2017, so we haven't done a lot of work on it yet. The drill program to really put together that resource was financed in the fall, October of 2019, so just last year at this time. And in the course of a very short drill program last fall, we were able to already put together this resource. So early days, and we're right located next to Victoria Gold and Alexco, the two largest miners in the Yukon. And as Matt said, the Yukon's a great jurisdiction to do business in as a miner, because we have mines which have recently gone through exploration and all the phases of permitting and financing and being built. So it is a jurisdiction where you can advance projects. Our nearest comparable is Victoria Gold's Eagle Mine. It's just 40 kilometers away from us. Also a near surface, potentially, it is an open pit mine. We have a potential open pit heap leachable project just 40 kilometers from them. And when you look at their grade, their life of mine grade is 0.63. And it's early days. If you look at our grade and you increase the cutoff grade by 0.3, the ounces go down by less than 15%, but the grade goes up by 20% to 0.65, which is right on par with life of mine Eagle. We've got a neighbor just down the road to look at what their capital costs are and what it took to build that mine and what their all-in sustaining costs to guide us and on what we might expect. We also have a second project, which is also an open pit, potentially open pit heap leach mineable project, over 500,000 ounces of grade of 0.85. I'm not going to talk about this in the really short presentation that we have here on TakeStock, but it is also one which I think will be exciting in the current gold market and coming gold market. Here's where we're located. The blue block is Victoria Gold's property and their Eagle Gold mine. They will be a 230,000 ounce producer. They reached commercial production in July of this year. Also adjacent to us in gray is Alexico's Keno Hill. They're putting their underground mine into production, very high grade silver mine. The orange block was the original Ormac block that we had until earlier this year. And now we have since expanded it with the red areas, which we call the Ormac expansion, as well as the Nitro property. We think these are critical extra areas, which we now own 100% because we acquired them by staking, which have the hallmarks and geology similar to what we're seeing at Airstrip and Powerline. Our property benefits from infrastructure, being adjacent to 2 mines. The Yukon's a jurisdiction where you can permit properties. Our team has a track record of being able to permit projects and doing things right. We're in a jurisdiction where the First Nation knows mining, has a settled land claim agreement, and knows how to work with miners. And actually, we use numerous businesses which are owned by the First Nation in our current operations. And our discovery cost, I think, tells a great story of how efficient it is to do exploration in the Yukon. That resource cost our shareholders less than $2 per ounce in exploration cost. Also very exciting, we have got an ongoing drill program. We plan to drill 10,000 meters this year and continue through 2021, and we are fully funded for that. So that's pretty exciting for us to be able to plan that far into the future. Our big shareholders are Victoria Gold and Alexico, the 2 miners that we're adjacent to. Both of them are heap leach mine builders, lots of northern experience building, operating, constructing heap leach mines. They give us technical advice, they know the geology in the area, but they also are helping guide us on what we need to do to advance this project. In addition, our other big shareholders are Cisco and Sprott, who came in based on our technical merit of putting together that resource in the fall of 2019 financing. And all 4 of those, along with other key shareholders in the mining industry, came into our most recent financing that we closed in July, raised over $4.7 million, which along with warrant exercises gave us over $6 million to spend in exploration. We're still sitting with over $5.7 million in the bank, which means that we are fully funded for both our G&A and 15,000 plus meters in 2021. That's enabled us to plan for the work that we're going to do on our Airstrip and Powerline this year. This year, we started out by drilling Airstrip, taking some pretty aggressive step outs. We've now expanded Airstrip zone, which was 1.2 kilometers in strike length, by another 200 meters in strike length, as well as another 100 meters to the south. Powerline, we also took some aggressive step outs on Powerline, planning to come back through the fall here and drill out to bring that to an inferred level. Later, we'll come back next year to start to bring some of these areas to indicated. But you can see that resource there. That was done in May with a $1,500 pit shell. You can see that there's lots of mineralization that extends beyond it. The airstrip remains open to the east and the west and at depth. The power line's open in all directions. And we're pretty excited about Powerline. One of the things that we did was actually take broad step outs from Powerline to Airstrip in our drilling. We believe they're potentially connected. You can see in this inset map, there's the Airstrip deposit projected to surface, that blue oval, and beneath it, the green circle is roughly the Powerline deposit. The area that we call Oryx Hill is roughly 10 kilometers by 10 kilometers, a huge area with a large gold and arsenic anomaly. With lots of historic drill results, both RAB and diamond drilling. We believe there's potential for another near surface resource here. So we stepped out all the way from Powerline to Oryx Hill and are awaiting results from this. We have a huge land package to explore, lots of targets now. And I think you'll see that we're well positioned for this fall. We'll have results coming in all the way through March, and we'll continue to drill for both grade and ounces through 2021. So look forward to you watching our story.
Excellent, Tara. Thank you. And now our third presenter, Rob Henderson, CEO of Great Panther Mining. Most recently, Mr. Henderson was president and CEO of Amerigo Resources Limited, a copper producer in Chile. He oversaw a $95 million debt financing to complete a major expansion project, safely increased production, lowered cash costs, and extended the life of the operation to 2036. Mr. Henderson started his career as an engineer at Rand Mines Limited in South Africa, joined De Beers in 2002 as assistant head of technical services, and later as project manager at Hatch Limited and Kilbourne Engineering Limited. Between 2006 and 2012, he was Senior VP of Technical Services at Kinross Gold Corporation. Mr. Henderson holds a BSc in Chemical Engineering and an MBA both from the University of Cape Town in South Africa. Sorry, both from the U of Cape Town in South Africa. He is a member of the Professional Engineers of Ontario and a director of BQE Water, a TSXV-listed mine water treatment company. Rob, it's great to have you back at TakeStock. You made our investors money with Amerigo. And even if we don't have you in person at the Pete Club, all yours.
Thank you, Mark. Appreciate the intro. And thank you, Tara, and thank you, Matt, for your great stories on the Yukon. And I'm happy to continue along with the Yukon trend. Although Great Panther doesn't produce gold in the Yukon, the Klondike was discovered in 1896 by my namesake, Robert Henderson. So I'm pleased to have my name in the Hall of Fame. But back to Great Panther, we are a producer. We produce gold and silver in the Americas. The COVID has affected us like everyone else on the planet, but I'm happy to say we put in pretty strict protocols, and our operations in Brazil and in Mexico are all in operation, still under very strict protocols. The most recent update from our second quarter, it gives you a bit of a background as to what we're doing and how we're doing. So we have our mine, our flagship mine is Tucano in Brazil, and it had a really good quarter. We managed to break a number of records in earnings. We had record EBITDA, we had record cash flow from operations. And the company as a whole produced 38,000 ounces, and we're well on track to meet our full year guidance. The quarter, we saw revenue of 67 million and cash flow of 20 million from operations. And we ended the quarter with $60 million in cash. Tucano itself produced 35,000 ounces, and this is an increase over Q1. And the all-in sustaining costs, we're well on trend to meet our guidance of $11.50 to $12.50 per ounce of gold sold, with a total gold production of 120 to 130,000 ounces. But Tucano, I think the main story there is our exploration program. It's in a region that's underexplored. We had a pretty generous budget of $7 million this year, 55,000 meters. And we're hoping to update the market a bit more on that in Q4. But the drilling is probably exceeded expectations, and we're pretty confident that we're going to extend the life at Tucano. And the focus is now to get into the district and drill some of the targets that have not been touched yet by a drill hole. So the main story is Brazil. That accounts for about 80% of our revenue. But Mexico is what Great Panther was founded on. Bob Archer started the company back in 2005 with two mines in Mexico, Topia and Guanajuato, which we call GMC. And Topia and Guanajuato are still running today. They produce typically in the order of 1.5 million ounces of silver per year. This year, we're guiding downwards a little bit. We were shut down by the Mexican government as part of the COVID protocols. Mining was deemed a non-essential service. But we did start up again at the end of May, and both Topia and GMC are running well. And we expect a combined guidance of about 2.4 to 2.6 million ounces of silver equivalent at an all-in sustaining cost of $17 to $18 per ounce of payable silver. So all three of our operations are cash flowing, and our cash balance is obviously looking a lot healthier now than it did at the end of last year. This is just a bit of a slide on our Q3 update. We released these numbers last week. We produced 39,000 ounces of gold. Tucano consisting of 31.8 thousand. Topia and GMC obviously a lot smaller, but well on way to meet our full year guidance of 146,000 to 158,000 ounces of gold equivalent from our 3 operations. Why Great Panther? We're growing. We're a gold and silver producer focused on the Americas. We have assets in Brazil and Mexico with a development project in Peru, and all 3 of these are great mining jurisdictions. We're actively exploring large land packages, particularly in Brazil, and we have a mandate to grow. David Garofalo, our new chairman, ex-CEO of Goldcorp, believes that we do need to be bigger to attract the more institutional investors, so we are looking at acquisition opportunities. I'm very happy with the management team. I've been on board since April, and I believe we've got the right people in place to drive us forward. Myself as an operator, my focus is on continuous improvement in operations. I think we always need to keep a sharp eye on costs and productivity and challenge each other to do better. And last but not least, I think we do have a pretty attractive re-rating potential in comparison to our peers. And I think we need to get out there and demonstrate that Great Panther is a good vehicle. And I think the exploration results are going to go a long way to show that. Sustainability, we have released our inaugural report. Please look at it on our website. This pretty picture of the world where we are, so Tucano in northern Brazil, Topia and Guanajuato in Mexico, and Coricancha is a development project in Peru. So Coricancha is basically in a desktop study phase, and we need to figure out the best way to mine it. The previous operators, Nearstar, last mined it in 2013, I believe, but struggled with grade. So we're looking to a more selective mining approach at Coricancha to get a decision on a restart next year. I've talked about management and the board. I think we've got a great team in place. The story is about growth, and this slide just shows how we've transitioned from Great Panther Silver back in 2018, where about half of our revenue came from silver, to after the acquisition of Tucano, where 83% of our revenue now comes from gold. And our production last year was 147,000 ounces of gold equivalent, and we look forward to growing that. The main story of Great Panther is really about Tucano, and this is a great asset in Brazil. It's been underexplored. It's in production, and we certainly are looking to drill it further and increase the mine life at Tucano to carry on benefiting our investors. We're listed on the Toronto Stock Exchange and the New York Stock Exchange, and our market cap is in the order of 300 million. So
very good, Rob.
That's it.
Thank you very much. And now we will bring back all of our presenters for the Q&A. Good, Tara and Matt. So each of you faces the challenge at budget time of deciding which of your excellent targets to drill and which to defer. Factors such as the need for better definition of existing resources, benefits of expanding an existing resource, and hopes to make a new discovery. Give some examples of some targets on which you have deferred drilling and why. And why don't we go Tara, Matt, and Rob?
Great. Thank you, Mark. Well, there's a few factors at play this year. So, we wanted to actually get results back, and labs have been a little slow on getting results, so we've deferred things for that. But this year, when we were funded, we wanted to take some bolder step outs and actually drill some exploration holes. It would have been easy to just drill and continue to step out, adding ounces near to our existing 2 deposits. But we've deferred that to the winter here and to next year so that we could actually test a few structural targets, that bold step out from Powerline to Oryx Hill, as well as, going to the east and the west on airstrip. We deferred most going to the east on airstrip because we were confident we could do that at another time in the season, and we really wanted to test the western extents. And I think that's part of the decision making around, okay, now we're financed. we need to do this now to look for some of those blue skies. And I know Matt looked for some blue sky targets this year too, and your shareholders want you to take a few of those risks, and then also come back and add ounces consistently. Oh, looks like Mark got frozen.
Yeah. No, that's like, I guess for us too, you know, there was a lot of decision making on really what to do. And when we were kicking around the different ideas on what we wanted to do this year, number one, taking the remaining inferred ounces to indicated this year and kind of, you know, getting the ball rolling on the pre-fees. With COVID, it just didn't really seem like the right year to do that, because with that, you're bringing in a ton of, you know, engineers, just like a lot of people coming in from the outside. And so we had like really strict protocols, and actually we still do to this date. Anyone coming from outside of Yukon has to self-quarantine for 14 days before going into camp. So it was just not the year to be able to really move the you know, the current resources forward. But again, like Tara mentioned, it's the market was hungry for, and is still hungry for, new discovery. So it was perfect in that we were able to you know, to go out and test these other targets that we built up over the last number of years, and, you know, essentially full support from you know, both old and new shareholders. So so yeah, it's going to be exciting to see what comes out of that drilling.
Thanks, Matt. Yeah, I think at Great Panther, you know, certainly our focus is at Tucano, and as Tara said, it's a balance between getting more certainty on your drilled deposits and then stepping out and looking for the undiscovered new discoveries. And so that's exactly what we're doing at Great Panther with our $7 million budget there. Most of the first half of the year was focused on just drilling around the existing pits and extending our open pit mine life, drilling out some of the inferred resources to put them into measured and indicated. But we have such a large land package at Tucano, and the district is unexplored. So, and the previous operators have identified several great potential areas to be drilled, but none of them have actually managed to put a drill rig in there. So we've just made a road into a regional target, and we hope to be drilling it in the next couple of weeks. So we're crossing our fingers on that one.
Very good. And so, looking forward to next year, what are a couple of the things that each of you didn't target and drill that you might go back to in the coming year? And let's just stay Tara, Matt, Rob.
Well, similar to Matt, and you know, we didn't target any drilling really to move from inferred to indicated. We're going to leave that all entirely to next year and subsequent years. We have a few other targets that we didn't get around to. It was a really wet year in the Yukon. So anywhere that was too swampy, we've either deferred for winter or for next year, just because of conditions. You know, we adapt our program in the field based on what we're seeing in every hole, and where our targets are, and what makes the most sense. So we've got lots left for next year. We still want to keep expanding both airstrip, power line, and even Oryx Hill. So it's early days for us.
Yeah, for us, next year is going to be all about moving the known deposit forward. So converting, that'll be about 20,000 meters to convert the remaining inferred into indicated. But then whatever else we hit this year is going to be, you know, it's going to be aggressively moved forward. So, you know, with the idea of moving, you know, whatever we hit, whatever we discover, if it looks good enough and big enough, into the indicated category. So it's going to be aggressive. So it'll be interesting to see what again comes out of this year, because it'll really tell us what you know, at least part of next year will be.
Yeah, at Great Panther, I think we're going to do much the same as we did this year. So we're going to continue drilling our, you know, high-grade narrow vein underground mines in Mexico, just to keep you know, ore ahead of the miners. But in Brazil, I think we're going to be looking at the underground. there's a belief that we will have sufficient open pit resources to last us a while now. So it's time to reinvestigate the underground potential, which we've got about 1.2 million ounces in resources there. So we need to prove up what we can do underground at Tucano.
Very good. Now, changing a little bit, now that you have some data operating in this more difficult environment the last 6 months, to what extent has the coronavirus affected your cost of operations? And we're looking for specifics here. In the case of GPR, Rob, perhaps you can discuss why, and I could be wrong, but it seems the mining costs for Tucano, as per AISC, were actually lower in Q2 than in Q1. So why don't we start with Rob and then go Matt and Tara?
Mm-hmm. Yeah, I mean, COVID has affected us in a number of different ways. Brazil, we managed to get on top of it early. We put the protocols in place. We managed to keep the operation running. In Mexico, we were affected by the government-mandated shutdown. So we had to shut down whether we liked it or not. So I think we saw costs go up in Mexico because essentially we had 2 months without any ore, but still attracting all the overheads. Where in Brazil, the cost did go down in the second quarter, but I think that's mainly just due to a timing thing. In the first quarter, we typically saw a lot more waste and more capital stripping involved compared to the second quarter. So it's just a bit of a lumpiness in the mine plan that affected Tucano. On the whole, I would say COVID has not materially affected our costs.
Our costs, they'll have definitely gone up for sure. There's a few reasons, obviously, just the whole, the protocols that we had in place for making sure people had to self-quarantine. But all in all, most of our employees were from the Yukon. So that was negated, fortunately. But I think the biggest thing for us is for us to really maximize the efficiencies with our budgets. You have at least two drills turning. And because of COVID, we started with one, basically, and this was working with the local First Nations too, where we started with one and just to see how it went. So basically the first month was starting in kind of the early part of August. We just went with one drill, kind of a skeleton crew. We had about 9 or 10 people out there in camp. And that went for well over a month, actually, almost a month and a half with that in place, just again to make sure everybody was comfortable with it. And then we increased it to 2 drills. So it'll definitely increase overall, per meter costs, but to get out of the season and to not have any worries with COVID, again, we're still out there, so we're not out of the woods, but here's hoping that everything works out fine.
And similar to Matt, our overall cost per meter weren't significantly increased, maybe 10%. We started with one drill and we just stayed with one drill. And the Yukon this year was really busy with other exploration companies. So I think a lot of our costs might actually be more related to competition for people and other resources, especially with Victoria Gold and Alexco coming online. There wasn't a whole lot of extra people that were willing to work in the mining sector that were available. So I think that's affected our costs probably equally as much as the coronavirus, and it was a challenge for us. But we took the approach similar to Matt, just really consistent, same group of people, same drillers, and now we really feel that we've set ourselves up for next year, and we've got the industry generally has a good reputation for how we've operated in the Yukon and dealt with coronavirus and made sure that we've been part of the broader community and supporting those people that haven't been so fortunate during this. So I think that will serve the whole mining industry very well going into 2021 in the Yukon.
Very good. And of course, the price of oil being lower hasn't hurt your operating costs either, I think.
No.
So each of you make reference to silver, zinc, and lead for at least one of your projects. On the one hand, having additional metals from a producing mine can modestly buffer the cycles in metals prices, but the minerals containing these metals can complicate your metallurgy and recoveries. So I'd look to you to speak to this, and why don't we go Rob, Tara, Matt?
from a metallurgical point of view, it doesn't really affect us. The Mexican silver mines send flotation operations where we produce a concentrate, and Brazil is a leach process where we really don't have any silver. So we've got, we do have a mix, but they're very separate buckets. But I think I will note that although we don't have metallurgical issues, you certainly get investors who prefer silver to gold and vice versa. And I think right now we're seeing that a pure silver company gets quite a premium valuation over a gold company. So there is a silver lining out there.
We've been focused mostly on our gold targets, and Airstrip, we do know that we see some of those Keno Hill style silver veins, but we really haven't chased after them enough for them to be a significant part of the deposit right now. We focused our current metallurgy that we just drilled 2 dedicated metallurgical holes, and we've been looking at our core from earlier this year to do some bottle rolls, but really focusing on the gold recoveries. And we haven't yet started to look at the areas where we're seeing that silver, and we haven't drilled the areas where we have the silver, lead, and zinc anomalies really in any depth. We're focused on gold right now.
For us, it's the lead and zinc actually play a big role in our met, because the gold on the front end, it's all kind of a sequential process, but the gold goes about 45% or so goes with the lead concentrate, makes it an extremely high grade con, almost 60% lead, 6,000 grams silver, and about 130 grams gold. So it's going to be a really sought after concentrate, we believe. Also, the zinc is quite rich with gold as well, and then you get down into the arsenopyrite con, which again is something that we're looking at, getting a bit creative with as we go into pre-fees, to possibly ship that out and avoid the on-site hydromet circuit. So.
Right, very good. So now we'll talk a little about environmental issues, in particular for Matt and Tara, in that order. Talk about what you foresee in potential mine development and how you would plan to deal with any environmental issues. And then Rob, perhaps you can talk about the GPR balance sheet with a $46 million liability for reclamation and remediation, and perhaps you can speak to that a little.
Okay, yeah, for us, it looks like from our test work anyway, ARD shouldn't be a problem at KLAZA. Also, groundwater is very minor as well at the site. I think one of the big things for us is the tailings, and that's I think that's going to be front and center kind of on a global basis, right? So I think that'll be a big focus as we go into pre-fees is that, and albeit it's a small tailings dam, but does it really have to be there, and can we work proactively with First Nations and locals to make sure everybody's comfortable with what we're doing, and if not, then we'll look at other means to deal with those tails. But again, as we go through permitting, we want a mine that people are going to be comfortable with, that's going to be permittable. So I think, to answer your question, Mark, I'd say tailings is going to be the main one.
So in Banyan, we're still early stage, but we did start and put together our base water quality monitoring program this year, starting quite early. We also have the advantage of having our 2 neighbors, Victoria Gold and Alexco, who've just been through the permitting process, that have a wealth of data from all around us and even the boundaries of our property, which gives us quite a bit of information and baseline environmental. So we don't anticipate any specific problems that we aren't going to start monitoring and make sure we have the data for early. And of course, we envision an open pit heap leach mine very similar to Victoria Gold. So again, we have a template just down the road. It's a known technology that works in the Yukon. It's been successfully reclaimed in the past, and so we're working hard to make sure that people understand that we're taking all the right steps. We're starting early, and that we do intend to operate to the highest environmental standards.
Yeah, Mark, your question on the mine closure, it is a real cost. All those cost estimates have been provided to us by third parties. And, you know, as responsible miners, we do have to clean up, and all 4 of our operations are basically have been running for decades. So, you know, we don't kid ourselves that there is work to be done on closure, and you can't just walk away from these things. So we think we've posted an appropriate amount there.
Okay, very good. Before I move to the last question, Tara, there is one question for you. You talked about plans for 2021, but
yeah.
Does Banyan own the land in between Nitra and Ormac?
No, there's a small strip of less than a kilometer between the two of them. And I see those chat questions too about, are we going to drill Nitra? That is the plan. We did do some soil sampling at Nitra this year, and we're developing some targets there. We'll be working on permitting the Nitra property over the winter months and have started that process already. So all going well in the world, we do plan to do some drilling on Nitra and the targets there next year. And we do think we've got the best ground staked there, and we do know who's in between us, and we've had conversations with all of our neighbors. But there's some different geology in the area. It's not all the same because it's continuous.
Very good.
The simple answer.
Right. Very good. So the final question to take us home, and let's go Matt, Tara, Rob on this. Apart from convincing investors to sell other stocks and buy yours because you represent better value or opportunity, which is what all companies should seek to do if they tell their story, what should investors look for as milestones over the next short while and over the next year?
Okay, for Rockhaven, it'll be the results from this exploration drilling over the next, probably the course of the next 3 months. Again, Tara alluded to the fact that the labs are pretty heavily backed up. And then it'll be, you know, basically the talk on where we're going from there on the pre-fee side of things, how big this thing can possibly get to. And again, you know, the fact that it's pretty unique out there for such a high grade deposit that, you know, we're confident is only going to get bigger. So it's going to be exciting times.
So similar to Matt, we're going to have lots of news flow from our drill results. Going probably into March, and then we plan to start drilling again in March, and we'll drill 15,000 meters next year, again continuing to make this project and these deposits larger. We're pretty confident there's more out there, so I think it'll be pretty exciting going into 2021. Yukon's a really hot jurisdiction with 2 new mines operating. There's lots of attention being put towards the Yukon, and we're sandwiched right between those 2 new mines, and as they're growing and cash flowing, I think that will certainly generate lots of interest for us and other Yukon explorers. Both Matt's and our projects have exceptional infrastructure, which is in high demand. We've got roads, power, cell phone service at our property. That's pretty unique. So I think with our news flow going through 2021, along with some other catalysts along the way, I think that there's lots for upside for Banyan shareholders.
I think our next milestone is our earnings release, and I think we're going to see more positive cash flow from our operating mines. We'll release those early in November, so I think we can see and expect another good quarter, increasing our cash position and fixing our balance sheet. I think from the exploration point of view, the results of this year's drilling at Tucano will be updated into our new mineral resource and reserve statement at the year end. And our regional exploration, of course, is entirely dependent on success on pretty undrilled deposits. So I would think either this year or early next year we should have some news out on our regional drilling.
Very good from all of you. Thank you to our presenters. May you have success in expanding your market caps as you tell your story, and may you have success in the field. So thank you, Matt Turner, CEO of Rockhaven Resources, RK, Tara Christie, CEO of Banyan Gold, BYN, and Rob Henderson, CEO of Great Panther Mining, GPR. And to you, our attendees, thank you for your time today. Do go to today's company's websites, learn more about them, and check in at TakeStockLive.com. Be determined in your due diligence and ask tough questions. We'll be back for 2 more Wednesdays with sessions on mining next week on the 21st of October, and then our last session of season 2 on the 28th of October. This is Mark and Raj signing out from TakeStockLive.com.
Thanks, everybody.
Bye.